Well, good morning, everyone. Welcome for another installment of Coffee with Kevin. I've got my coffee here ready to have a little sip, and I invited a good friend of mine that I've known for good night, probably almost 20 years. Tony Tydlacka with iLease works, and he and I have known each other for a long time. We see each other at every trade show, just about. Good to have you on, Tony. How you doing?
Hey, I'm doing great. Yeah, summer's been good here in Minnesota. I'm a little late for coffee for me today, but thanks for having me on. And yeah, we go way back. I think we first met in 1999 at the AAD in San Francisco. It was either 99 or 2000, right around there.
If you don't mind, Tony, give a little background of who the heck you are, what you do, why you do it, and give us a little kind of a history of Tony Tydlacka.
Hey, no problem. Yeah, Tony Tydlacka is my name. I live in Minnesota. Most people call me Tony T. They can't figure out how to pronounce my last name, so that's great. But yeah, I started in the industry in 1999, so yeah, going on 26 years. Started working for a couple of smaller independent finance companies and went out on my own in 2008 when the recession hit. Really with the goal of creating a boutique lending opportunity where we could partner with equipment finance sellers and provide their financing and just really be their one-stop shop. We're not a direct lender, we're a broker and work with a lot of different great banks. And our goal is really just to find the best programs to fit your customers. We've had a lot of success with that. We're not trying to, be the biggest company, but we're trying to continue to do things the right way. Make sure your customers have a great experience, know what they're signing up for, have a good experience with us, the same as they do with you.
Well, okay, let's ask a question. Let's talk general, marketplace. So, July 2025. I mean, everyone's reading things and tariffs and finance
Yeah.
and what. How's the market right now for you guys and for the customer base out there?
Well, summer's slow, obviously. 4th of July hits, vacations are going on. A lot of the reps are trying to, take a breath after the end of the second quarter. Second quarter ended strong. We had really good volume, really good fundings. Looked at a lot of great deals, funded a lot of great deals, and so we were really, really happy with that. I think there was some pent-up demand after the tariff stuff that was going on. I think people spent a lot of time on the fence after all those tariffs were announced, not really knowing what was going to happen with the economy and different things, but it seems to have eased. I expect that things will pick up pretty strong as we roll into the end of this quarter.
And so, when people are looking for financing, like break it down just real simply to us. If we've got a customer and they want to look at finance now, and basically what we do is we kind of hand them off to our partner out there, and we hand them off to you. And so, give someone kind of a guideline of what they should be expecting and what they should be looking for when they're looking for a partner. And then I'm gonna have a secondary question on how do you distinguish what you should be doing when you're looking for financing? So let's talk the first one. What are kind of the
Yeah.
key components in the financing process?
I think the biggest thing is knowing what you're signing up for. There's definitely some things out there that you want to avoid, and our goal is always to educate the sales rep, the vendor, and the customer to make sure that they understand what to look out for and what they're signing up for. There's terms in the industry that are kind of red flags, like simple interest, for example, early payoff options, evergreen clauses, and those are, we try to vet those things out for you as your partner to make sure that we're giving your customer a great experience. And really from a rate standpoint, rates are higher right now. They can expect probably into the double digits, and that upper nines into 12, 13%, just on depending on time and business specialty, MD or non-MD. Depends on a few things, but rates are higher. We've seen mortgage rates go up. We've seen our cost of funds go up significantly. Hopefully, we start seeing some of those things start coming down soon. But it's still a good way to finance because it's a soft credit pull on your personal credit. You're personally guaranteeing it, but it's not reflecting on your personal credit as debt. It's not tying up lines of credit, not bank lines. It's not tying up cash. So it is still a good way to finance as long as you're getting a reasonable deal and a deal that you understand.
Financing versus in cash. A lot of customers say, I've got
Yeah.
$50,000 in the cash. Why would I want to finance that? So maybe down and dirty why.
I mean, there's obviously a lot of different schools of thought there. I like to have cash in case of emergencies. I like to have a line of credit available in case of emergencies. So when you use those for a purchase, it's, now something happens or all of a sudden, I mean, if you look back and think back to when COVID hit and business stopped, having a line of credit, having some cash in the bank was very important. I'm not saying that's going to happen again. Hopefully that never happens again. But who knows what the emergency could or may be. Maybe it's a family emergency. So it is smart to at least keep some cash available. We do see a lot of people put some money down to try to, get their payment maybe to where they want it. It comes down to ROI as well. How many procedures do you need to make a payment versus, paying yourself back or basically borrowing that money, from yourself.
So when they're buying, and I know this holds true with cash with borrowing. There's a Section 179 clause. Can you explain how that applies to most customers and what that really means?
Yeah, I mean, the Section 179 deduction can be used whether you use a line of credit, pay cash, finance. The biggest thing is you need to own the equipment. You need to finance it to own, not have a purchase option or something at the end of the term. And the deduction is you write off the entire purchase up to, I think right now it's $1.25 million or something like that. For the most part, the customers that we're working with are not going to go above that dollar amount. They're not going to buy more than that per year in equipment. And you write the entire purchase off. So if they made $300,000 and bought $150,000 in equipment, right there, you're only paying federal tax on 300 minus the cost of equipment, $150,000. That's a huge savings, not to mention all the other write-offs you may have from your business over the year.
So would it be fair to say, in some cases, like let's say I have 50,000 bucks and I drop it into money market fund, I drop it into the market. And I think money market funds go anywhere from 3 to 4% right now, maybe 5 if you find some shorter term. CDs are in that 5% range, 4 to 5% range. You put it in the market, most people say they're going to get a 5 to 6% return. So you kind of look at it to say, listen, if you're getting that's a 4 to 6% return on your money and your rates are 8%, then really your net is a 2% cost of your money at the end of the day. Is that a way to look at it, or is that too simplistic?
Well, I mean, that is definitely a way to look at it. We do a lot of the deals now where we have early payoff options. It's usually after 24 regular payments, and terms are usually, 60 months or so. So that's also an option. As you get into it, you do the financing, and then you have the option to pay it off, and you still preserve your cash, you still preserve your lines of credit. But yeah, I mean, the spread between what you could get on your money and what you're spending from an interest rate standpoint is clearly your actual cost of funds if your other option is to pay cash. And then it just comes down to, it's a business decision. It's a business expense. You're not paying your light bill 5 years ahead of time. You're not paying your staff 5 years ahead of time. You're paying those things as you use them each month. And this is really just another one of those expenses each month, kind of the cost of doing business that just like all those other things that just adds to you've got your monthly inflow, your monthly outflow, where's my profit? I just need to make sure I have the profit margin that I want.
So let's go back to the first statement. So you're a broker. What's the difference between going through to someone like you versus, I work with my local bank and I go try to do something like that. Give us kind of the ups and downs.
The local bank is always a reasonable option. They're going to be the lowest rate. We always tell people that. But most likely they're going to do a hard credit pull. You may or may not need to provide some financial information to them, but it's generally reported on your personal credit as debt or a line of credit, revolving debt. Revolving debt is one of the biggest things that drives your credit score down. If you have a lot of revolving debt availability and you're using a high percentage of that, including that line of credit, so now your actual available line of credit amount is low, your percentage of availability is low, that drives your credit score down pretty significantly. So that's probably one of the biggest advantages. And depending on your situation, you may or may not care. If you don't have any other debt and you're not planning on taking other debt, again, it just comes down to a consultative approach that we take, try to learn your situation, learn what your goals are, and find out if we can help, if we can be of assistance. And it really comes down to providing the information, understanding your situation. And if we've got a solution that works for you, great. If you've got a better option, we're going to be the first people to tell you that.
All right, so what are the common misconceptions about financing? I think people use financing, leasing, buying, all kind of the same terms. So what are the misconceptions you hear from a lot of customers out there when they start talking to you about looking into a finance option?
The biggest thing we hear is people who have probably had a negative experience with another finance company when they've purchased equipment from another, different vendor that maybe, provided them with someone. And, so we have to kind of educate. It really comes down to we do a lot of educating on what we're offering versus what you may have been offered in the past. And I mean, you can look at our Google reviews, they're all 5 stars and people rave about how we've really helped them understand the process. And I think that just gives people a comfort level to say, hey, look, these guys are acting in our best interest. We're also obviously, in business to make a profit, but we also want to just make sure that we're giving fair deals to people based on what the market is doing right now.
Yeah, I would have to say that's probably one of the things I liked working with you the most is that you basically tell it how it is. I think I appreciate that because our customer base appreciates just being told straight what's happening, what's out there, what are the options are, what's going on, because I think that's the biggest misconception is people get into something they really don't understand. And then that's, I think, where a lot of the discontent in the financing, at
Yeah.
least from our perspective, what I hear is that people just didn't understand. I didn't know that was supposed to be that way. I didn't know I had that program that, built it.
Yeah.
So I know there's a lot of programs out there. I know there's a lot of vendors out there. What are you kind of like the sweet spot? Like, what do you see most people do? Are they coming out and doing a 60-month term? What are you seeing kind of the big finance program right now?
Most people do. Our biggest thing that we offer is 6 month deferral. So there's 6 payments at $99 to start, followed by typically 60 regular payments after that. And most people opt for that because it gives them time, it gives them a runway to, start generating revenue before they have to start making their payments. So that's what we see the most of. And then, followed by an early payoff option generally after 24 regular payments. So yeah, you've got to get into it a little bit. The banks need to hold that paper for a period of time to be able to make a return on their investment. But again, it comes down to education, making sure everyone understands what the terms are. But that's what we see the most of. Maybe a 90-day deferred, but we really see people wanting to have that runway.
Well, what else should we know about financing that we haven't addressed in our short period of time here on Coffee?
Well, at the end of the day, it's all about making it simple and easy. And you hear the term, tripping over dollars to save nickels. And when we're talking about a 100,000 or maybe $150,000 piece of equipment, the difference in a point or two of interest it's significant, but it's not nearly as significant if you're talking about perhaps your mortgage or a really large loan that's over a long period of time. What really gets you with interest is time. So even though a shorter term might have a higher rate, you're still paying less interest than a longer term with a lower rate. So it's important to remember that the difference between maybe what your bank is or a line of credit and what we can offer, it might seem like it's a lot higher because the rate's a little bit higher, but in all actuality, the payment is actually not that different. It's, maybe $50 or $100. That is over the course of 4 or 5 years, that's not that big of a deal when you start looking at it from a business expense standpoint. I mean, you spend that much money on, paper towels probably. So you just have to break things down to, into things that make a little bit more sense sometimes.
You finance all types of equipment or just in the aesthetic market, kind of what's your sweet spot?
We generally specialize in the aesthetic market, and we really only work with, we're pretty specific on the vendors that we work with. We want to work with companies that share our values, that share our desire to make sure everyone's getting a fair deal. And that's what I've always loved about working with you is I think you've got that reputation as well. And generally, the companies we work with have that reputation or strive to have that reputation and do the right things for their customers. We've kind of hung our shingle by doing that. We consider ourselves a boutique shop, kind of a family business. everyone that works with me, we go back a long, long time, and we just love what we do, and we love to see the good reviews and build the relationships that last, like you and I, 25, 26 years.
All right, so someone watches this, they say, okay, I gotta go find Tony. Tony T, gotta find where Tony T is located. Is it the best way to go to iLeaseWorks.com, or what's the
Yeah,
best
you
way
can
to
go to
find it?
iLeaseWorks.com or Tony T at iLeaseWorks. You can easily get a hold of us that way. I've also got some podcasts that go a little bit more in depth about financing 101. I've got another great one that's the pitfalls of financing. Did those a few years ago. Again, just want to educate people, and there's some great resources on my website that do that, and help you be an informed consumer. Because that's really the most important thing is being informed.
Well, if you can't tell, one of the things we preach at Monarch is really education. And the better educated everyone is in our industry, consumers, reps, partners across the board, it is better for all of us because I think we'll be smarter, we'll be better, and we'll be much more effective in how we do our business. So, Tony,
Yeah.
thanks for taking the time today to get on with Coffee with Kevin. And it was great to catch up with you. And if anyone needs a search out Tony T, go to iLeaseWorks.com or Tony T at iLeaseWorks.com and search them out. But again, you can always call us. We have a direct line into Tony. We can
Yeah,
help you
call
out.
Kevin.
Call me. We'll help you out. Thanks, Tony. I appreciate you. I know it's a little later in the morning. It's still morning time here. So you guys have a wonderful rest of the afternoon. And thanks to everyone for getting on the call and listening to Coffee with Kevin.